Welcome to Explain the Charts, where we dissect the market's pulse through news and technical analysis. Today, we're examining BTCUSD, Bitcoin, the world's leading cryptocurrency, to understand its current price movements. The news surrounding Bitcoin is mixed, with some analysts predicting a potential rally if the Federal Reserve cuts interest rates. However, others are concerned about selling pressure from MT repayments and the U.S. government holding a significant amount of Bitcoin. Despite these uncertainties, Bitcoin's price has shown some resilience, hovering around the $60,000 mark. Let's turn to the charts to gain further insight into Bitcoin's trajectory. If we take a look at the one-day chart, we can see that Bitcoin has been in a consolidation phase for the past few weeks. The price has been bouncing between a support level around $58,000 and a resistance level near $62,000. This sideways movement suggests a lack of clear direction in the market, with neither bulls nor bears gaining a decisive advantage. The recent price action has been characterized by a series of lower highs and lower lows, which is a bearish signal. However, the volume has been relatively low during this period, indicating a lack of conviction among traders. This could be interpreted as a period of indecision and accumulation before a potential breakout or breakdown. Switching to the one-hour chart, we can see a more granular view of Bitcoin's recent price action. Here, we observe a series of smaller candlesticks, reflecting the more volatile nature of the hourly time frame. The price has been fluctuating around the $60,000 level, with multiple attempts to break above the resistance and fall below the support. However, these attempts have been unsuccessful, indicating a tug-of-war between buyers and sellers. The volume on the hourly chart is also relatively low, confirming the lack of strong conviction in the market. This suggests that the price could remain range-bound in the short term, with the potential for a breakout in either direction. Now, let's zoom in on a specific range of candles on the 15-minute chart, focusing on the past 24 hours. Here, we can observe the price fluctuations in greater detail, highlighting the constant back and forth between buyers and sellers. The price has been testing both the $58,000 support and $62,000 resistance levels, but has yet to definitively break through either. This type of price action is typical of a market in consolidation, where traders are waiting for a catalyst to trigger a decisive move. The volume on the 15-minute chart is generally lower than the daily and hourly charts, which is expected for such a short time frame. However, we can identify periods of increased volatility, particularly during news events or economic releases. For instance, the recent announcement of the Federal Reserve's potential interest rate cut led to a surge in volume and a temporary price spike. Looking back at the news, we see that there are several factors that could potentially influence Bitcoin's price direction. The Federal Reserve's interest rate cut, if implemented, could inject more liquidity into the market, potentially boosting risk appetite and driving Bitcoin higher. However, the selling pressure from MT repayments and the U.S. government's Bitcoin holdings could offset this bullish sentiment. Traders will need to carefully monitor the developments surrounding these events and assess their potential impact on Bitcoin's price. Ultimately, Bitcoin's future direction will depend on the interplay of these fundamental and technical factors. Let's recap the key price levels we've identified and discuss the potential scenarios for Bitcoin's price. Based on the chart data, Bitcoin is currently trading within a range between the $58,000 support and $62,000 resistance levels. A break above the $62,000 level would signal a strong bullish trend, with the potential for a move towards $70,000 or even higher. This breakout would be reinforced by increasing volume and a sustained move above the $62,000 mark. On the other hand, a break below the $58,000 support level would confirm a bearish trend, potentially leading to a decline towards $50,000 or lower. This breakdown would be validated by decreasing volume and a sustained move below the $58,000 level. However, it's important to remember that the market can be unpredictable and unexpected events can occur. For example, a sudden announcement of new regulations or a major security breach could significantly affect Bitcoin's price. Therefore, it's crucial to remain vigilant and monitor the market closely. Traders should develop a sound trading plan, manage their risk effectively, and only invest what they can afford to lose.